Good day, elemental market followers. I'm going to create a specific video based off trades of yesterday, and I'm going to implicate a specific trading plan you guys can use. There are certain things that we are teaching in the mentorship that goes about three main things. Is once you start trading, first of all, you need to understand the market. So if I have to summarize everything that I've learned so far in my almost 6 years of being in the markets, is the first thing is you have to understand the markets. If you start to understand the market, you can then understand how it flows, how it works, what to do, what not to do, and everything that goes with it. So that's the first step to becoming successful in trading, is to first of all just study the markets. Now, that basically means this. As if you look at the charts, you need to start understanding what it does all the time for you to be able to create a system. So after you understand the markets, you want to create a system. Let's put this here, label it. You want to create a system with an edge over the market. So this is something that I'm going to show to you today, is you need to find a strategy that works with the market. Have a 1-to-5 ratio, that's about the minimum, and risking 0.5% of your account to get yourself moving forward. I'm also going to show you why that is important. Then the last thing is self-mastery, or mastery of yourself. That basically means is once you found your edge over the market and you've created a system that uses that edge to win, or have a consistent win rate, you need to master yourself to follow that system that has the edge over the markets. If you can't master yourself and you can't master your system and the markets, then you're always going to be going backwards or break even, not moving forward. So first of all, you need to understand the markets, then create that system, then self-mastery. It doesn't help you master your psychology and mindset. I know you want to make a lot of money, but you don't even have a system in place, or that system doesn't even have an edge of the market, or you don't even understand the markets, but you want to make money. So that's basically the first three things that you need to consider whenever you get in and on the market. So simply going to bring up the charts. There was two trades that we took on EA yesterday. Quickly remove everything. Yeah, no, you can keep it like that. There's one trade I'm in this morning. Okay, so if I'm looking at EA, this whole block here, where price is moving one direction and just instantly started moving to a different direction, what I can see just from the price action from this point here is that basically price was moving bearish. You can see there's a lower low, there's a lower high, lower low, and then just instantly there's a higher high. That tells me whatever happened in this region, there's liquidity for you to take a trade. So what we did in the mentorship, we did refine it in terms of our entry, but this is the zone that we were looking at. So the first zone for me was where price came from, which was this region here. And this was the first entry that took a loss. So that's part of the game. You need to recognize that and understand that is literally what's going to happen most of the time with you. Is you're going to take a trade, take a loss, and that's going to be part of it. So knowing that this was the first zone, we had a trade taken in, I think it was here about, I think it was at 35, to be honest. And then you basically want to take a 1-to-5 ratio. This one took a loss, price started pushing up, went back down, grabbed the loss. That's fine, it's part of trading. So just of this, I'm going to show you one loss, and then the second one was a break even, where this is the second zone that I was looking at with one of the mentees. This whole zone here, price came into the zone. We took an entry at the bottom side of it. Price has risen, and then from that, what's rising point, basically we moved our stops to entry. And then as price came back, stopped us out, and literally nothing happened. We didn't make money, we didn't lose money, and that's part of trading. Now, this had played out at the end. Price did grab liquidity just below this whole region here and actually moved up. So this is the whole buy zone, but price dipped just below it, grabbed our stop loss the first time, braked us out, and then moved along. And this pip count was a very good pip count. If you entered on the peak point that you could have, that was about 140 pips into the upside for the next hour, even 130 pips. It's not a bad movement. Is the current side that I'm in. This was from early this morning, but I'm going to break down to the second trade that I was in on GJ. So just to quickly bring it into perspective. So what we had, just the same pattern happening. So there's a low, so price is creating a new low point. You can see there in terms of the structure, roll over, low being created. And then price just started pushing up, created a high point and then a high low. So there's no trading opportunity. Then a higher high, and then what's lower low. So we had structure breaking this at this point here, and that gave me a clean setup to trade. So I said, okay, basically the liquidity came from this whole box region here. And you can even go and label it as sell liquidity, which is red. But getting a trade in this whole zone is too much pips. So we want to refine it. So you take yourself into a lower time frame, and then you basically end up with this region here. This is where price is pushing for that last region and then just rolled over. So anytime price comes into this region, you can take a trade. And according to the mentorship, this is something that will teach you if you jump into the mentorship, is getting those spot entries. So let's just do that. Now on this 50 level is actually where I entered my trade. And I was going for 1-to-5 ratio, and the 1-to-5 ratio was valid, but then I saw this is where the previous push came from that broke the structure here. So this is basically where I wanted to take profits in this region. Let's quickly put it as buy liquidity. So we can see this is where the push happens. Price turned, pushed up, pulled back, and then pushed all the way up. So this whole region here was our area of interest to take profits. And if you wanted to take a counter trend trade, this is the best place to actually get into your trade. But then playing out a 1-to-5 ratio was the game plan, but I knew there's more pips that you could have gained. So the more pips you gain, the better you perform. So I think I took it out at 70 pips, if I remember it right. So this is a 1-to-7 ratio. So basically from the previous two trades, one took a loss of 10 pips and one took a break even, so there was no pips gained. But then this one gave me the full run. Now, let's quickly go back into your system as you want. You want to create a certain edge over the market. So if I'm looking at this, just take this away. There we go. So if I'm looking at the markets and I need to understand the markets, the first thing I need to do is study the markets. So exactly what I just did there now on the second trade on GJ and EA is I was actually following my strategy. Now, I'm going to give you a certain way that you can look at the market. So what we can look at is utilizing your tools. So what we had here is the market exhausting to a low point, and you can utilize different ways of understanding it. So what happened here is the structure was doing this basically. Brush. Okay, so we have a lower low, lower high, lower low, lower high, lower low, lower high, higher low. This is the first indication that, okay, this whole region here is liquidity. This whole area is liquidity. Price broke structure, where you can start seeing, okay, visually, price was bearish up until this point. So low, low, lower high, low, low, lower high, low, low, lower high, high, low. First indication. Second indication, we broke structure. So this whole region would be your liquidity pool, where you can get in on a very good trade to get yourself moving forward. But you don't just want to jump in with all of the retail traders. That's something we teach in the mentorship. You want to get in when the institutions actually jump into trade. So the first one that came basically just tested the support level. And it was faking most of the retailers out by creating a lower high point. Just take the brush in. So a equal low, a lower high. So most of the retail traders saying, okay, no, this is a fake. Price is going to continue going downwards. Price pulled back into the buy liquidity and then shot up, getting a new higher high point. Now, this is where you want to get into your trade, knowing that this is the last time price can actually get into this zone. Get your buys in and then go with it. And then again, here was confusion that was made by the institutions, and then price continued up. So looking at the charts in terms of just utilizing the structure now, I know it looks a bit confusing. I'll give it a clean run now. Basically, what we had here is this. So a transition, this is what we call it. The market is transitioning from a bearish run, creating lower lows and lower highs, into a bullish run. So here's the first indication that we are running up. Okay, so if I'm removing any of the charts or any of the charts work, this is basically what it looks like. Let me just do this. So low, low, lower, high, lower, low, lower, high, high, low, first indication. So you highlight that. And then we break. Then you want to label it and say, okay, we broke structure. We have a break of structure. And then what you do is you understand where did liquidity come from. Now I know I'm really focusing on where price transition. So from this point, exactly this area here, we transitioned. And this would be the whole area of interest. If you want to even utilizing this last lower high point where the bullish volume came in, which is there, that bullish volume came in. And then within the zone, that's where we want to get into your trade. Now we have a secondary break of structure that gave us, again, that secondary area of interest, which was this area here. You could have jumped into a trade. Now, knowing that, again, at 50 level that I've went over with the GJ trade, that's where we want to get into your trade. Now, taking a 1-to-5 ratio would be a very good point. So day trading, there's a 1-to-5 ratio. So you have a 10 pip stop loss, a 50 pip run, but you know price is most probably going to head back into that region there on top. And then you have even 11 pip ratio. You can go for a 10 pip, a 1-to-10 ratio or 1-to-11 ratio, whatever suits you. And you can see this one played out perfectly. So the same thing flows of it. And if I remove any of the charts work, this is what it should look like. Now, you know, price is going to come into this region. Let me just quickly put on the chart. So there we have this happening. Price going back, equal lows. This is what we call the fake, a lower high, faking most retail traders out. High, low. Now I know this is where liquidity actually is. We had it again, a break of the structure. And basically what you're waiting for is this to happen. Let me just label this right using a dash line. So this would be the pre, and then the post would be something like this. So the pre would look like this, where price is starting to shift. It's transitioning from a bearish market into the first indication, the second indication. The third indication is once we actually broke again, a higher low with a higher high. And then basically all you have to do is mark out your zone. And this is what we're expecting, price to pull back into that area, grab that liquidity, and then shoot all the way up for 100 pip run. This is a 1-to-10 ratio. So your plan basically is to understand the markets. Once you understand how transition works and you follow your winning system with a 1-to-5 ratio, you're always going to be ahead, risking at least 0.5 if you want to 1% of your account. Now, this is the reason for it. If you don't have a risk reward ratio and you're just trading, let's say you have a 30% win rate, 30% win rate, you have a 50% win rate possibility, win rate, and you have, let's say, a 75% win rate. Now, let's be honest, most of you guys starting out or being a retail trader, trying to understand the institutional way of order flow, is you have about a 30% win rate. So if we're looking at 10 trades, that means 3 out of 10 trades would be profit. So if we're going on a standard lot, that would be basically 3 wins. So that would be 30 times by, let's say, taking consideration, we're going for 1-to-5 ratio, so 10 pip stop loss, let's say 50 pip run. So we're looking at something like this. We did get a good run. So with 30 pip win rate, a 30% win rate with a 1-to-5 ratio, 10 pip stop loss, 50 pip run, or you go for 20 pip stop loss, 100 pip run, you will always be making, so 3 trades wins, 7 trades losses. So 3 wins and 7 losses. Now, if you keep your lots the same, you should always be moving forward. So let's say you're going on a 0.1, just to introduce you, or even one lot. So one lot, basically, how you want to calculate it, I'll bring up the calculator here. So one lot would be equivalated to $10 per pip. So times by 50, that's equivalent to 500. So one win would be $500. So taking that 500 times it by 3, because we have 3 wins in terms of the 30% win rate, equates to $1,500. So we can go and put that in, $1,500. And you have 7 consecutive losses. So we're going for a 10 pip loss. So $10 per pip times by 10. So that would be equivalent to $100, and we take 7 losses. So that means for every 10 pips you take a loss for, that's $100. So $100, and we lose 7 trades times by 7. That's about $700. So that means it's $700. So with a 30% win rate, you would still be in profit. Taking the two from each other, so 1,500 minus 700, you still have $800 profit. So $800 profit. But if your ratios are weak and you have a 1-to-3 ratio, things start changing. But having that 1-to-5 ratio, you have a better profitability or better chance at being profitable. Now, taking the same with a 50% win rate, you're taking 5 wins and you're taking 5 losses. So basically what you would get to is, I'm just quickly going to do it from the back of my head. So 5 wins, 5, 10, 15, 20, 25. So $2,500. If you want, you can check in the calculator, but I should be right. So then again, 5 losses would be equating to $500. So that means basically your profit that you can gain is about $2,000. So again, that's the 2,000 minus the losses, the 500, you get to $2,000 profits. Now, taking it a notch further, once you're understanding the market better and better, you're going to have a better win rate. And you master yourself, you're going to have a better win rate. You're going to have better entries. You can trade less smart and not often. And you're going to get to this point where you're going to have 7 wins. And that would equivalent to basically, quickly going to do the calculator, 5, 10, 15, 20, 25, 30, 35, $3,500 dollars. And then the last one would be 3 losses. That would equivalent to $300 loss. So at the end, you're going to get yourself into a very good win rates, but the difference between you moving from a 30% win rate to 70% win rate is to understand the markets institutionally. And as you understand it institutionally, you want to continue following up with your system. Create that edge that has, or create that system that has an edge over the market. If your system doesn't have an edge over the market, then it means you're just going to keep on losing. You're never going to move forward. You're always going to be in a negative. And you always want to have a 1-to-5 ratio, meaning if you are having a 1-to-5 ratio, you can see here by the stats, you'll always be moving forward. So this would be the plan that I would make out for you. Obviously, if you're starting with smaller lots of 0.1 or even 0.01, whatever it is, having that 1-to-5 ratio gives you that consistency. It doesn't help the one week you make $10,000, but the next week you lose at $10,000. You want to have this consistency. So understand the markets institutionally. That's the first thing. So yeah, I've given you complete insight. Price is bearish. Price started transitioning into a bullish run. And then this was the confirmation to get in on a trade. And this one is even running. It's running over 100 pips. In the mentorship, we jump in early. We have entries at the bottom that we go for. And we teach you how to refine your strategy and how to master yourself. It doesn't help you have an understanding of the markets institutionally. You have that system, but you're not applying it. You need to master yourself. You need to master your psychology. Sometimes when you take a loss, that's where most people would get impulsive and start taking trades based off emotion, not based off logic. So with that being said, I hope this video was useful for you. If you found value of this, please give us some feedback onto the Elemental Markets chat, the chart chat room. You can also post your analysis there, things that you're looking at, and so forth and so on. Other than that, hope you have a fantastic day and a profitable trading week.